and head of cybercrime at Cartwright King, which is the logo on the screen here. Now, we'll have to be kind to Gary because he's fallen squarely down the Bitcoin rabbit hole and now is full-time in this Bitcoin game.
More or less, yeah.
Yeah.
Certainly in cybercrime.
It says here on your little profile here that you started, became interested in cryptocurrencies in 2013 through their potential for use in online crime and money laundering. So this is where this guy's going to have some really interesting insights to have with us, and has lectured on the growth of Bitcoin ever since. Yeah? So are you still a practicing solicitor as well?
Absolutely,
Yeah?
yes.
Okay, cool.
Certainly practicing in the fields of cybercrime. Originally, just by way of introduction, my history was in defending the largest and most complex criminal fraud prosecutions brought in the UK by people like the Serious Fraud Office and HMRC. In recent years, as technological crime, cybercrime, be it pure cybercrime or cyber-enabled crime, which is basically just old crimes committed in a new way using technology, or intellectual property crime has risen, the marketplace has really forced me in that direction. And really, just by way of, again, introduction, and thank you very much for that introduction.
Have you officially taken over?
I have.
Okay, round of applause for Gary.
I do that, you see. I do that. It's part of the job. Just by way of introduction. Oh, sorry. First comes the disclaimer. This is no substitute for formal legal advice. And that's funny, yeah, but it's also serious and true, because the number of cases that I've come across in my career where a client will turn around to me and say, yeah, but I got legal advice before I did this and the lawyer said it was fine. And I said, well, where'd you get your legal advice from? Well, I Googled it, or I asked someone online, or I asked a mate. And, really that's kind of worthless. So if you have a problem, a legal problem, get formal advice, get it properly. Pay for it if you have to, because that protects you. It's not for my protection or anything else like that. It's for your protection. But what I'd really like to speak about today is Bitcoin and the law, and really the history of how Bitcoin has started to interact, or the state has started to interact with Bitcoin as it's grown in popularity, in uptake, and as a phenomenon, really, over the last few years, and how it first comes into contact with state organs. And how really what we're talking about is something that was initially capable of being considered an extreme threat to the authority of the state, in my view, and something that could have elicited a response from governments, from law enforcement, that was extraordinarily negative, but which actually in practice didn't come through. And in fact, how the state response, governmental response, legal responses to things like Bitcoin and other disruptive new financial technology has actually been overwhelmingly positive, despite the problems it causes, and something that has been designed at a policy level within government to facilitate the growth of financial technology in order to obtain the benefit that new technology can bring to the UK economy. So, first point, really, I don't want you to think necessarily just about Bitcoins or just about the technology that underlies Bitcoin, because we hear a lot about blockchain and how major financial institutions might say something along the lines of, oh, well, we quite like blockchain technology, but we don't like Bitcoin because that's just a tool for criminals. What we're in the middle of here is a technology revolution that's been going on for a few years and will continue, and will probably continue to gather pace probably for the rest of our lifetimes and beyond, that is fundamentally changing relationships and the way we interact with each other. And really all the law is a way of governing those relationships between individuals, between states, between businesses and other businesses, between businesses and individuals. So when we talk about Bitcoin and the law, we really have to understand the challenges that new technology poses to governments, but also the opportunities that it poses as well. And striking that balance is something that the UK government has tried to do, in my view, quite successfully. So, as you can see on the screen, the three sort of headings are actually quite useful, because not only are they the sort of three main areas in which Bitcoin and the law have interacted already, but they actually flow through each other quite well chronologically, for reasons that we'll see going forward. Now, Bitcoin and crime. Why is Bitcoin important to criminals? Well, it's quite simple, really. Bitcoin represents, or the facets of Bitcoin that it possesses technologically are extremely potentially important to Bitcoin. We can see that it's effectively much, much harder to detect and prosecute criminal activity that uses cryptocurrencies, electronic money, things like that. Specific elements, it's quasi-anonymous. We know it's not totally anonymous. Perhaps a better word is pseudonymous than quasi-anonymous. It's decentralized. No one individual has control over it. No one individual controls the ledger or can control transactions in relation to it. And it operates outside the existing financial system. Now, perhaps all of that is kind of, certainly the last three, are kind of the same way of making the same point. And it's a point that you can illustrate through reference to the existing financial crime structure. The existing structure and the existing legislation for fighting financial crime. There is essentially one tool that the authorities use to fight financial crime, and that's the Proceeds of Crime Act 2002. This was an extremely serious bit of legislation when it came in. And there are two main powers under that act. The first is a power of restraint. So if you're suspected of a financial crime, then an investigator can go to a court and get an order that will freeze your bank accounts. And that order will prevent you from accessing those bank accounts and any other assets. So they can register a charge against your house. You can't sell your house, you can't sell your car, you can't use your bank account. The only withdrawals you can make from that bank account are ones authorised by the prosecutor with the connivance of the bank, who would be in breach of the order themselves if they allowed you to do more than that. So effectively, that one order prevents you accessing any of your finances without authority. The second is confiscation. Now, the purpose of restraint, the freezing order, is to guarantee that the assets are still there when you are convicted of your financial crime and can be seized by the state and frozen. Now, these are extremely serious and draconian measures that the state has at its disposal. Restraint orders can be put in place just while you're suspected of a crime. So before anything's proven, long before you're convicted. I mean, sometimes these things can be put in place 2 years before a charge is actually brought. And that could then be 4 years before a conviction. So the potential to disrupt your life as a financial criminal is extreme. And the ability of the state to control your finances in that respect is severe. Now, if we then look back at the technological facets of Bitcoin and the fact that it's decentralized, no one can control it, you can't freeze a Bitcoin. You can't prevent a transaction going through on the blockchain. So this represents quite a significant hole, potentially, in the asset forfeiture regime. And what it effectively does is it brings through, as do many of the technologies which are sort of growing in popularity today, things like encryption, the Tor browser, all of those different technological elements. What they do really is they kind of usher in or bring in a new era of personal choice, an almost opt-in regulation, if you want to view it that way. Now, I couldn't categorize that as a good thing or a bad thing. That's for each of you to do individually. But it certainly exists, and it certainly allows an individual. Say I were served with a restraint order this morning. I couldn't go to Barclays and withdraw £1,000 out of my account. But if I wanted to, I could transfer that same £1,000 in Bitcoin through the blockchain extremely easily, and there's nothing anyone could do to stop it. Now, that's not to say that those assets would never be traced or found or seized. Well, not seized, traced or found, or that there wouldn't be consequences for me in doing that, taking that course of action. But what it allows me to do is something that I didn't previously have the opportunity of doing, which is that what I can do now is I can make the decision myself as to whether I want to comply with that order or not. Compliance isn't forced upon me by the mechanisms of the state and the way that the state interacts with what could be termed the sort of traditional banking system. Now, the consequences for non-compliance could be rather severe. So, for example, if you have a confiscation order made in over £1 million and you don't pay it, then you will go to prison for 14 years. in default of payment. But what happens there is that the decision as to whether I would rather serve my 14 years and come out to my life by a swimming pool in Dubai, or whether I'd rather pay the £1 million and not go to prison for 14 years, is very much my decision. And speaking to clients, as I do constantly about this sort of legislation, what I know is that individuals who face these kind of problems, who are accused of stealing large sums of money, very often find that the asset forfeiture regime, over and above any issue of the substantive offence, is their real fear and their real problem. So the ability to, A, move and potentially hide your money, and to defeat the asset forfeiture regime in the UK, is something that actually, in the context of financial crime, becomes very serious indeed. As we've seen, the assets do fall under the existing regime, but it gives you that new possibility of deciding whether you would rather comply or not. And it goes further than that. It goes much further than that. It's not just about the criminal law in this jurisdiction. As we can see, back in 2016, Iran was subject to probably the most significant and most restrictive sanctions regime that had yet been in place. I mean, again, nowadays, probably the better example is North Korea. And we can see on the screen, if you wanted to transfer money to Iran, it was a very difficult process. You couldn't just do it. Transfers of euros over 10,000 have to be notified to... Sorry, have you got a question? Sorry? Quite. Quite. Yeah. But if you want to transfer money to Iran, you've got to have specific authorization in advance from the Treasury if it's over 40,000 euros. No need to do that anymore. If you want to transfer 40,000 euros to Iran, you can do it via the blockchain extremely easily. And we see this in practical terms in something like WannaCry. The belief is that WannaCry was effectively a tool of North Korea, and there are sort of wider geopolitical cyber warfare implications in all of this. But the idea is that North Korea was using WannaCry as a way of getting foreign currency into the country. Again, using cryptocurrencies because, of course, you can't use the normal banking system to get money into North Korea. The website is a site in Esfahan, Iran, and he was just a guy online who was using Bitcoin as a means of getting payment for selling his shoes. And if you sent him Bitcoin, he'd send you a pair of shoes. So that's effectively a guy living in Iran, subject to extremely restrictive sanctions, not the sort of place you can run an eBay or an Amazon business from, taking advantage of Bitcoin to use to build an e-commerce business. Why don't you accept other forms of payment? We can't. If you wanted to buy shoes from Iran without Bitcoin, you couldn't do it. But now you can. So again, we've got holes in the asset forfeiture regime in the UK, and we've got holes in the international sanctions regimes. It's quite serious stuff. And where we get to with this is that when we see Bitcoin in its earliest days, it's very much just almost an experimental theory that is sort of brought about in 2009, but is of very little consequence early on. And the really big Kickstarter for Bitcoin in its early days is this. It's the Silk Road darknet marketplace. It's extremely important to Bitcoin, and Bitcoin is extremely important to the Silk Road because it's the first time, except for sort of transactions for things like pizzas between individuals, it's the first time that the concept of Bitcoin is proven as a wide-scale means of transacting value. So this marriage of technology in a wider sense, so you've got Tor, encryption, and anonymity and security, and Bitcoin as the means of payment there on the Silk Road, that really provides this huge upsurge in usage, because for the first time you can actually use your Bitcoins to buy something and get hold of something. It just so happens to be that it's drugs. Now that's no accident, because again, you can't simply use the you can't use normal payment mechanisms to buy drugs online because it leaves a trail, or leaves a trail that is more obvious that can be found. Criminals, by their nature, are early adopters of technology. They have to be, because they are locked out of traditional methods of doing things, or traditional methods of doing things get them caught. And the Silk Road at the time was absolutely huge. It was obviously in operation from about February 2011 to October the 3rd, 2013. And all it does is operate like Amazon or eBay, but for drugs and other illegal activities. In terms of Bitcoin, the key point about Silk Road is that it provides this incredible boost in the number of transactions that can take place, and what you can actually do with your coins. And we can see that there's over 1.2 million transactions on the Silk Road overall. And the revenues generated are absolutely huge. It also doesn't do too badly in terms of things like publicity. If we take the maxim that no publicity is bad publicity serious, I remember sort of 2012, 2013 articles appearing in The Guardian about this site online at which you could buy MDMA and cannabis, and it would just come through the post 2 or 3 days later. But I want you to take notice of these numbers here at the bottom. It's 150,000 registered buyers, 4,000 registered vendors. In terms of the drugs trade, actually, it's absolutely tiny. I don't have the figures to hand, unfortunately, but the drugs trade in the UK is absolutely massive. It's worth about 40 billion quid annually. This is it's a new threat, but it's something that's quite technologically advanced and quite niche, even at that stage. And what I want to get across is that although at this stage in its life, Bitcoin and crime are almost inextricably interlinked, that isn't necessarily the case anymore. And what's happened is that Bitcoin has outgrown its criminal use. And that criminal use that was so important to it at the start in order to expand its user base, to inform people about it. It's left crime behind, very much in the sort of way that in terms of the cash that you would keep in your physical wallet. We would all accept that there are risks associated with that, money laundering risks and anonymity risks, effectively. There are reasons why some businesses won't accept cash over a certain amount. But we all accept that the value of cash in terms of transacting business and the value of cash to us and to our economy outweighs that criminal element to it. That also attaches to it. And that's really where Bitcoin has grown through. So whereas at the start, in this 2013, 2012 stage, there was a real risk that actually the negative sides of Bitcoin for the state could have elicited a response that was actually extremely strong and almost repressive in nature. That didn't happen. And what has happened instead is that Bitcoin has sort of continued to soar, and I don't mean just in terms of the price, but in terms of its usage, in terms of its adoption by businesses and in commerce. And the criminal element has kind of stagnated a little bit, which I personally, as someone who sort of understands how useful it could be to a criminal, find quite strange. But there you have it. So when we look at the figures on the bottom there, earlier this year, perhaps the greatest successor site to Silk Road, a site called Alphabay, was shut down. Now, in terms of the numbers, Alphabay was about 30 times larger on the day it was shut down than Silk Road was on the day it was shut down. Now, for me, that gives rise to interesting questions about, hey, what was the point of putting Ross Ulbricht away for 1 million years? Because it obviously didn't have any effect whatsoever. But the impact on Bitcoin is the most striking thing, because when Silk Road went down, Bitcoin and the Silk Road were kind of synonymous. And the two were very closely linked, and Bitcoin was known as the currency you used on the Silk Road. But by the time Alphabay goes down earlier this year, the link between darknet marketplaces and Bitcoin has been almost completely broken. And the shutdown of Alphabet doesn't really cause a ripple in the Bitcoin world, as it were. And that might be because, you know, there are other cryptocurrencies that are better suited to criminality. But the version I prefer to believe is that actually Bitcoin has just continued to grow in terms of its adoption and in terms of its commercial use rather than its criminal use. So the story of Bitcoin so far is one of success against actually some quite difficult odds. So going back to cyber, I mean, the point here is that Bitcoin now is really only a feature on some darknet marketplaces, but also in relation to things like WannaCry and CryptoLocker as a means of extracting payment through those cyber-dependent crimes. So if your work server is encrypted, it's likely that Bitcoin will be demanded as payment there. But I want to just dig into WannaCry a little bit deeply, because I think the WannaCry story actually has some quite interesting lessons for Bitcoin as well, because it was quite widely publicized that when WannaCry infected the NHS computers and all the others in May this year, it was very successful, about £150,000 worth of Bitcoins was paid into 3 Bitcoin wallets. So there we have it again, Bitcoin being used as the currency of crime. But then we see later that money just stays in those wallets, because everyone knows that if you watch the wallets, you'll be able to see the money move. And so it stays in the wallets for about 3-4 months until it does move, and everyone's watching it when it moves, and everyone's watching on tenterhooks to see what happens, and can we catch these guys who are doing this? But where it moves to and how it moves is actually quite interesting, because what we see is that it moves to 2 exchanges. I think it goes to Shapeshift and ChangeLly. And what happens is that whoever is behind this tries to change the Bitcoins that they've got through the ransomware into Monero. So what you've got is a situation where, Bitcoin, in terms of its criminal adoption here, you've got Bitcoin being used as the criminal currency, if you can call it that, in the first instance, but only because it's the most successful and the most accessible cryptocurrency. It's the one that a criminal would expect you to be able to get hold of and buy and pay the ransom. But it's not the criminal currency that the criminal expects to be able to extract and to use. And in order to do that, you've got to use Monero. And I don't know how many of you know anything about Monero, but effectively the key point there is that the transactions are encrypted and the ledger is encrypted. It's not on public display. So you've almost got an acknowledgement there that Bitcoin as a tool for criminal purposes is not actually fit for the task. And in order to achieve your goal as a criminal, you've got to use something else. That again is something I think that is very positive for Bitcoin. Just like to make a quick sort of observation in relation to the Panama Papers, Mossack Fonseca, and more recently the Paradise Papers. Again, it goes back to this overarching technological point I'd like to make. I mean, here you've got both an individual or group of individuals effectively imposing their own morality on these firms. What we have is, again, the sort of the technological ability of the hacker who's obtained those papers and released them, taking precedence over the law and the regulation of the jurisdictions in which they're actually operating, because neither Mossack Fonseca nor Appleby or their clients may have been doing anything actually wrong, both in terms of regulatory sense or in terms of a legal sense, in terms of a criminal sense. But the fact is that in this era, if you are not technologically capable of protecting your data, then you are at risk of an individual who holds their own moral judgments to be superior to yours, turning you over. And in the Bitcoin context, again, the point I'd like to make here is that the moral outrage in relation to the dealings disclosed by the leaks in Panama Papers and Paradise Papers is again evidence perhaps of a changing world in which previously the structures that are in place to hide money lawfully or to hide money and avoid tax lawfully were only really available to the super rich or something close to it. And perhaps what we're really approaching here with Bitcoin and new modes of finance is really a democratization of that process, in that you don't need a Panamanian law firm to set up a complicated offshore structure in order to hide your money lawfully or to avoid tax lawfully anymore, because that process is enabled for all of us now by technology. And I'll just leave that there because we'll probably sort of start to see that play out in the coming years. Just a caveat to the money laundering points, though. As we see, the uptake on Bitcoin as a money laundering tool by criminals seems to have been very, very low so far. It seems to be just a bit too technically complex for them to get their heads around, unless you're using something like a malware Trojan in the first place. So again, the point here is that unless, or rather, back in 2012-13, there was this nexus, this almost symbiosis between Bitcoin and crime, that Bitcoin needed the uptake and the criminals needed the Bitcoin to be able to buy and sell their drugs. It hasn't really gone further than that, despite the obvious advantages that Bitcoin has for criminals. And that's a good thing, because what we get is a situation whereby actually Bitcoin has been able to outgrow the negative connotations that exist because of that connection. So we'll move on a bit to tax. And the tax guidance comes in March 2014. HMRC issues this guidance. It's really important because it's the first time that the state really interacts in a formal way with Bitcoin and cryptocurrencies. Other than sort of law enforcement raids on things like the Silk Road. The date is extremely important because Silk Road goes down in October 13, and I think Mt. Gox goes down in January, February 14. And that is something that really was a bit of a double blow to Bitcoin. And this concept requires people to have confidence in it in order to work. And those two individual matters were both potentially quite difficult hurdles for it to overcome as a concept, because Silk Road goes down. What are we going to spend our bitcoins on anymore? Gox goes down, and it adds fuel to the fire that all of these cryptocurrencies are unreliable. You invest in them, you'll lose your money will be stolen. But HMRC issues this guidance, and the first interesting thing is the date. The second interesting thing is how positive it is. It's supposed to be comprehensive. It's basically supposed to be aimed at anyone who mines, trades, exchanges, uses Bitcoin. It's still extant today. It's still in place. So it's actually weathered the vast changes between March 14 and today quite well. The most important thing in the guidance is about VAT. And the reason this is important is because if you were a government and you were looking to minimize the adoption of Bitcoin, if not kill it off straight away, the way to do it will be to classify it in such a way that VAT will be chargeable on Bitcoin transactions. We're all familiar with the Jaffa cake, Jaffa biscuit issue. It's a serious issue because if cakes are zero rated for VAT and biscuits are rated at 20% for VAT, it makes a huge difference. Because if you go into a supermarket, your Jaffa cake is suddenly 20% more expensive than your Jaffa biscuit, or the other way around, whatever it is. So if you wanted to kill off the adoption of Bitcoin, you instantly make it too expensive to actually buy, sell, trade them, because every time you do that, you incur a 20% liability to the taxman. So what they did is effectively exclude Bitcoin mining activities, trading activities, all the rest of it from VAT. So if you run an exchange, the tax environment for doing so suddenly becomes extremely favourable. The only time that VAT becomes chargeable on a Bitcoin transaction is when you're buying a service using your Bitcoin on which VAT is charged. Sorry, 5 minutes. And that's really important because VAT is an EU-wide tax. Not all member states dealt with it in the same way. So the Estonians say 20% Bitcoin VAT on Bitcoins, Poland 23%. And this goes to the European Court of Justice in the Hedqvist case, and they rule in favour of the approach taken by HMRC. So basically what you've got there is a situation where there are three positions in Europe. There is the UK position, which is extremely favourable. There's a position in other jurisdictions which is extremely negative and deliberately negative to clamp down on businesses that would and stop them growing. And then there's a situation in between where there's absolutely no clarification whatsoever. Now, the court in the European Court of Justice rules in 2015, and in this sphere, having that sort of 18 months of positive environment in which to grow is extremely important. It gives UK businesses a head start. The other sort of tax issues, again, very positive, or at least not a negative way forward, by saying, look, we'll look at all this stuff on a case-by-case basis. And you can see that attitude in other areas. The FCA, for example, in talking about ICOs, will talk about, we'll look at each one as to whether it should be regulated or not on a case-by-case basis. And again, what we see here is existing rules and existing tax issues being used to cope with disruptive new technologies. So it's the system adapting, but not creating new rules, but just adapting to the new challenges. And that's a feature you see very often with regulation and particularly HMRC. And you can contrast the UK approach, not only with the other internal European approaches, but also with the US approach. And that's much more cautious. It categorises Bitcoin as an item of property. And the problem with that is that it basically clamps down on Bitcoin as an item, as a means of exchange or as cash in the short term. So it's rather treating it as a long-term investment than anything else. One of the problems there is that if you, for example, buy a coffee using a Bitcoin in the US, that creates a capital gains liability on the increase in value of the Bitcoin. So if you buy a Bitcoin for $1 and then buy a coffee for $2, you've incurred a capital gains tax liability, which you wouldn't in the UK. In the UK, you'd only incur that liability if you exchanged for fiat, and if you then, if you were over and above the capital gains threshold for the year. But again, although the US approach is significantly more cautious than the UK approach, it's still applying an existing structure to the new technology. Sales tax, again, it's dealt with a state level, and at the state level, the sort of sales tax element seems to be being dealt with in a similar way to the UK in the major jurisdictions, so that's New York and California. Just to touch on the regulatory side of things, sorry about the size of the text on the slide. Financial technology is extraordinarily important to the UK. In 2015, it was worth £20 billion, and it's the fastest growing area of financial technology, for financial technology in the world. We need this money for the economy. Brexit means we need it more than ever. They're keen as authorities to strike a balance between safeguarding consumers and businesses and allowing Bitcoin businesses to grow. And that's something that's got quite deep roots. Now, although we can see that what's going to happen is that Bitcoin exchanges will be brought within the money laundering regulations, and the KYC information will be required of those using Bitcoin exchanges. It's all really rather common sense, and we heard earlier on about KYC and all the rest of it. It's really quite limited in terms of just making sure that your exposure to being used as a financial crime tool is limited. And it's quite interesting to hear the question from the floor before about how why not use technological means to guarantee that an individual is behind a particular transaction rather than just KYC. The only interesting observation I have about that is, of course, that banks aren't required to do so. So whilst a financial technology business might wish to do so, it's actually holding yourself to a higher standard than you're actually required to do, which is interesting. And that's probably a way in which the financial technology industry will start impacting on the traditional finance industry in the future. And the final point I'd like to make in relation to regulation is that actually the innovation from the regulators, the FCA, has been really quite interesting and quite revolutionary in a way. They've got this thing called Project Innovate, which has gone live in October 2014. It's all about encouraging businesses and financial technology businesses to thrive and to find them an easier way to market in the current climate. And the key element of this is the project, is the regulatory sandbox, which is effectively a sort of safe space between invention and between releasing it into a product into the marketplace. And it's designed to allow businesses to test their products without putting consumers at risk. It's a new idea, it's a very good idea, and it's something that's still very much in its early stages, but which is designed to assist financial technological businesses to bring their products to market safely. There are the sort of terms for getting involved. Now, the uptake on this was actually quite high back in 2016. There were 69 applications, 24 met the eligibility criteria and went towards testing. I think 18 made it to marketplace. And this is relevant to us here because of those 18, 9 were based on blockchain technology. So we see there straight away in practical terms how the regulators' approach to this has tried to be one that's progressive and helpful rather than simply stamping on Bitcoin businesses as they might have done back in 2012. And it's something that's going on still. Anyone got any questions? Sorry, that's quite a whistle-stop tour of various issues. Sorry, you were first.
This is gentleman right here.
Yes, 2 quick questions. Having seen the information you had on the asset forfeiture regime, whatever happened to being innocent until proven guilty? And then the second one is, my question...
If I ever find that out, I'll be sure to let you know. Because lawyers hate it. It's extremely harsh and can often be very unfair.
And then my second question is aimed towards know your customer and anti-money laundering.
Yes.
In reality, I just simply see this as some form of policing to the general public. The reality is, if you're a regime buying aeroplanes and tanks and whatever, you're doing this in US dollars. You're not doing it through the UK banking system like you and I. So this seems like complete overkill. You know, it's not stopping drugs coming to the country. It's not stopping, wars taking place or military hardware being bought elsewhere. What's it for?
Well, the point of KYC is, in my view, very much sort of after the event insurance. It allows the police or an investigator to put a name to an account, and that really is one of its limitations for me. I do.
I suppose the argument is it worth compromising the privacy of 60 million to catch 2 criminals? That's, or is it invasion of privacy? What do you reckon, Gary?
Well, it is an argument, but in reality, it's one that's already been run and lost because, as I say, if you want to run a bank or you want to open an account at Barclays, you have to provide KYC information that is that proves who you are. So, in that sense, why should a Bitcoin business or why should an exchange be any different? And that, unfortunately, is a sort of cold hard truth that we run up against when we run those sorts of arguments. Because if unless you can change the position, the reality of the situation, and say, well, anyone should be able to open a bank account without this sort of information, then you're never going to succeed on an argument to say that you should be able to have an account at a Bitcoin exchange without this information. which puts a massive hole in the system. I'm not saying that this can be regulated effectively, because, for example, I could potentially set up an exchange in a third world country. I could potentially, theoretically, for example, I could set up an exchange in North Korea, which may have absolutely no regulatory requirements of me, and I could accept applications from all over the world, and they have it straight away. You've got another hole in the boat, as it were. So whether, as a matter of practicality, any of it is any use or not, I completely concede to you. And my personal view is that actually, for 98% of people, it will just be a small hurdle that you need to cross to open your account. But the 2% who are going to use that account for something dodgy will go elsewhere where they don't need to jump the hurdle anyway. And let's not forget as well that, for example, if I were a Russian malware fraudster, I could walk out in the streets of Birmingham now and I could say to a load of people, well, I'll give you 200 quid if you let me use your bank account. You get 500 quid in your account, withdraw it, you keep 200 and give 300 to me. And they do that, and they get 50 volunteers, and you launder your money that way. So part of it is understanding the wider context of criminality and money laundering and the scale of the problem and how the traditional structures are also used and abused. But I take your point.
Yeah, my question was also about KYC.
Yep.
So most of us buy the coins like Bitcoins on exchanges,
Yep.
unless somebody is a minor here. So for those, we have to give all our driving license or passport copy, part of KYC. So does that mean government is watching me?
No, not necessarily. In fact, not at all. I mean, if you're I certainly don't believe that the government has the time or the inclination or the resources to watch people who are buying bitcoins on Bitcoin exchanges. I think even as a line of inquiry, that is a waste of time compared to what it might have been sort of 5 years ago. I don't think there's any reason why you would think that. However, if for example, transactions on the blockchain later became relevant in a confiscation case, then they would see where the wallets are. They would, go to the exchange or whatever, and they'd find out your driver's license, and then they'd come and talk to you. It's not proactive; it's retrospective. It's very much shutting the door after the horse has gone.
Okay.
Yeah, it's not proactive.
And the second part of this question is, if I'm transferring money from my one Bitcoin wallet to maybe my Indian account, so the money is going from sterling pounds to Bitcoins, and then Bitcoins to maybe US dollars or Bitcoins to Indian rupees. Will that be considered as a money laundering? Because I'm crossing the international border over there?
Well, money laundering has a specific definition. You have to know or suspect that the money you are receiving or transferring or obtaining or whatever is the proceeds of crime. Simply transferring money, if I got paid my wages and then bought Bitcoin with my wages and transferred that to India or wherever, that is not money laundering. Where you need to be careful is that it may be a breach of foreign currency regulations in India, for example, because I know from matters I've dealt with in the past that it can often be very difficult to get foreign currency out of India. But that's a slightly different thing. That wouldn't be money laundering. That's just an international money transfer.
Yeah, the way I think about that is like it's money laundering. So you are turning dirty money into clean money.
That's
so it has
exactly
to be dirty money, meaning the proceeds of some illegal activity.
Yeah.
And what Gary's talking about is like when you go to the US, you fill in the claim form that says, are you carrying monetary units above $10,000? So in your example there, where you send the Bitcoin to India or America, that could be breaking that law, but it's not money laundering, right? It's not declaring the correct amount of monetary currency coming into the country. Is that fair?
Well, in these circumstances, you wouldn't actually be carrying the money. So,
Well, this is the thing, right?
Yeah,
I had that argument, which is like, if I bring my Bitcoin hardware wallet into the United States with $1 million on it, well, I'm not bringing it into the country anymore that I'm bringing in my Gmail account, right?
and also they don't consider it a currency.
Well, that's why they've changed the
So it's
format.
just property,
Recently,
right, okay.
it says, or monetary units, right? So, which is like, you can tell they're trying to get closer and closer to snagging the cryptocurrency folk.
Yeah.
But I'm not carrying the money. The money's on the internet. It's just I have this key. I have the cryptographic key. Is it illegal to carry cryptographic keys over the border? I don't think so. You know what I'm saying? So there we go. Anyway, we're schedule slipping again, so you'll have to harass Gary outside. So for now, round of applause for Gary Broadfield.